Okay, students, now finally we are with our subjective section and you have to attempt only one question. So we are going to solve question number 1 first. So let's start solving it. Fred Fries is a catering business. The business has reached the end of its third year of trading and Fred has asked his sister, Dora, to help him to produce some accounts. She has been writing up his books throughout the year, and these has been kept correctly. Unfortunately, Dora had an accident and was admitted to hospital just before she started work on financial statement for the year ending 30th of April 21. So 2001. The Frederick the Fred Fries remember that you have been taking an accounting course and ask you to help him out. Now, students, imagine you are the accountant and you are going to solve the problem now and the information is given to you. You must be familiar with all these information, where they should be placed, and is there any kind of adjustment afterwards. You have to deal with them. And then finally, what you need to do, you need to prepare income statement and the statement of financial position as at that day. It means whatever the closing date is, it is already mentioned in the beginning. 30th of April 2001 is the closing date for this. So let's begin our discussion now. Here we go. First of all, the first information given to you is leasehold shop premises. It's a non-current asset. You must mention that it is a balance sheet item, non-current asset. Accumulated amortization on lease. Previously, we have already accumulated amortization lease 60,000 taken on 1st of May 2010. Fixture and furniture and fixture, its cost is 80,000. Accumulated depreciation on them is 16,000. It means the net book value will be 80,000 minus 16,000. That's the net book value of furniture and fixture. Inventory on 30th of April 2000, it was $1,000. Sorry, 1,000 pounds. It is the opening inventory. How do we know that this is opening inventory? If any information is given in the trial balance, then it is obviously understood this is the inventory opening. Receivable, we have opening balance of 22,500. So opening inventory, receivables, these are the values of current assets. So these are the balance sheet items, current assets. Furniture and fixture, non-current assets. Just keep marking them side by side. Payables, this is your current liability. It should be mentioned in your balance sheet. Coming to the loan secured on Fred's house, that's non-current liability, so you should mention in your balance sheet item. Balance as per cash book overdrawn. Overdrawn mean you have withdrawn money more than your existing balance. This is negative balance, by the way. So negative balance means that you have withdrawn money more than your existing balance. That's your current liability. Capital. This is opening capital, 75,000 must be presented in the balance sheet in the equity section. That's equity portion. Sales is an income statement item. IS mean income statement, should be presented in the income statement. Purchase, it will be used in the cost of goods sold formula in calculation of cost of goods sold. Wages is an expense of operating expense, electricity operating expense, and sundry. All these three are operating expenses. Okay, and this will be presented in the income statement. Now, let's move on. You also discover the following additional information which needs to be reflected in the year-end accounts. Fixture and fitting, which had a cost of 12,000 with accumulated depreciation of 6,000, were sold out for 3,000. So here you have to stop. We have already total furniture and fixture 80,000. So let's roughly calculate its values. We have 80,000 furniture and fixture opening balance. Out of this 80,000, we sold out the cost of fixture and fixture. The portion we sold out was 12,000. It means how much furniture and fixture left with us? 68,000. Okay. And the furniture and fixture we sold out, its Accumulated depreciation was 6. So let's calculate its cost was 12. Its accumulated depreciation was 6. It means its net book value was 6,000. But we sold out at 3,000 only. If the net book value is greater than the selling value, we get a loss on this disposal. And this loss should be presented in the income statement, by the way. This is loss on disposal of one portion of furniture and fixture, which costing us 12,000 was sold out at 3,000. So we got a loss 3,000. How do we know that? This is cost, this is accumulated depreciation, that's net book value, and this is selling value, and that's the loss value. Okay, next is bad debts expense of 4,000 needs to be written off. Okay, so we have the opening receivables with us. This is opening receivable 22,500, and 22,500 we have to allocate 4,000 as bad debts, and we will be left with 18,500 as remaining receivables as net realizable value. Furthermore, a provision of 2% is to be made on remaining bad debts. So, how much is our remaining bad debts? 18,500. So, if we take the provision, it must be taken on the remaining bad debts. So, we take 2% of 18,500, it's going to be 18,500 times 2%. It gives me 370 pounds. That's the provision. It must be reflected not only in income statement, because there is no previous provision with us. Otherwise, we could have used it. So we have to increase the provision, and this should be presented in the income statement as well as in the balance sheet. Next is fixture and fitting are to be depreciated on a straight line basis over the 5 years, and there is no scrap value and no depreciation is charged in the year of disposal. Okay. How much is the depreciation? How much is the value of furniture and fixture left with us? It was 68,000. If it is 68,000 and then divided its remaining useful life, 5 years, this is going to give us 68,000 divided by 5 years. 13,600 will be depreciation per year. So we got to know that how much to be depreciated every year. Next information is the leasehold property is amortized over 20 years. And the amortization means depreciation for intangible assets. Obviously, we understood already. So, what is the value of leasehold property? The leasehold property value is 300,000. So, let's calculate 300,000, and it is to be amortized over the next 20 years. So, 300,000 divided by 20 years is going to give us 15,000 expense for each year as amortization expense. So we have covered almost everything. One information is left: inventory. That's the closing inventory, by the way. If any information is given in the adjustments or after trial balance, it is basically closing information. So closing inventory will be dealt in cost of goods sold formula, and it should be reflected in the current assets as well. So there are two adjustments for this information. Every adjustment has two effects. Let's begin preparing our financial statement with the help of all our calculations and understanding. Okay, so stay with me, and then I'm gonna put everything information in the spreadsheet. Okay, now look at the spreadsheet I have made for you. First of all, we have to mention how much is the sales value, and then we will take every information from there. So selling value is given to us. Let's find out. Selling price is 123,000. So just put 123,000 here in the given column. And now keep putting the values from your formula. Okay, students, now you can see we have discussed most of the question parts, and now we will place each of the values in their appropriate places. Let's begin preparing the income statement first, because that's the first requirement. Prepare an income statement. And in the income statement, we will start with the selling price, sale value is given, then cost of goods sold is deducted, then we will get the gross profit. And then we will minus all operating expenses and any other relevant adjustment like bad debts or provision for bad debts and any depreciation. So if you look into my spreadsheet, I have placed the values, selling price, then I calculated the cost of sales, which is opening inventory plus purchases. This becomes material available for use, and then minus closing inventory. How to calculate cost of goods sold? Opening inventory plus purchases minus closing inventory. So your cost of sale is 60,000 and your sales value is 123,000. If you just minus sales value from cost of sales from sales value, you will get a gross profit. Okay, so let's fix this gross profit. So your calculation of cost of sale is equal to the material available for sale minus closing stock. This is 56,000. If you minus 56,000 from your sales value, then it will be equal to your gross profit. Sales minus cost of sales gives you gross profit. Fine. Now let's move on to the placement of the other values. Disposal of assets, I already have explained to you. This was the cost of asset which we sold out. The cumulative depreciation was 6,000. The net book value of the asset was 6,000, but we sold out 3,000. It is loss. So these adjustments are already explained. I just placed them into their appropriate places. Let's calculate total operating expenses. Total operating expenses becomes sum of all these expenses, and that becomes 56,970. If you minus operating expenses from gross profit, you will get operating income or operating profit. So your operating profit is 10,030 pounds. And there is no taxation in this question, so zero tax. Then your net profit after tax will be operating profit minus tax. This is the same. And there is no drawings involved here, that's zero drawings. It means the retained profit will also be the same value. Okay, we have prepared our income statement according to the given information. Let's prepare the balance sheet now. And these are the items to be presented in the balance sheet. And these are the adjustment we have already solved through our discussion. The furniture and fixture, look at the calculations. Originally it was 80,000, 12,000 was sold out. We are left with 68,000 cost of furniture and fixture. The accumulated depreciation on furniture and fixture, how did I calculate this value? Look at this. The opening balance of accumulated depreciation was given to us in the question statement. Look at that. Accumulated depreciation on furniture and fixture is 16,000. Then we sold out one portion of the furniture and fixture and its accumulated depreciation was 6,000. So 6,000 is deducted from the opening balance, and then current year depreciation should be added to the opening balance, and we are having total accumulated depreciation 23,600. If you deduct this accumulated depreciation from 68,000, you will get net book value of the asset, and then same value can be placed over here in the balance sheet. So I am just taking this value as it is. Now you can see the assets net book value is 44,400. Fine. The leasehold premises. Look at that. The cost was this. Its already accumulated depreciation given in the question was 60,000 plus this year accumulated amortization is 15,000. So we got net book value of the landhold premises 225,000. So just 225,000 will be placed here. And then total non-current asset becomes this value plus this value. Then it is your total non-current assets. What about the current assets? You are having receivables now. How much is the receivable left with you? So opening receivables, look at this opening receivables. This minus bad debts, and this is the remaining good receivable. So the good receivable, this is presented in the balance sheet because we are deducting the bad debts already. If you look into the receivables, it was 22,500, but out of that, 4,000 was bad debts and a remaining good receivable was 18,500. Let's move back to spreadsheet, and then receivables, 18,500 is left with us minus any provision for about bad debts. So this is 370. So that's the final value is given to us in the calculation. Look into that, receivables. And then you can find out the remaining net realizable value, 18,500 minus 370. That's 18,130. So receivables will be presented 18,130. Inventory. Look into the question. The inventory must be the closing inventory, and that's 2,000. So we will place 2,000 here in the balance sheet, and then we will calculate total current assets this much plus this much. And then total current asset is this. And now it's time to calculate total assets. Non-current assets plus current assets. This becomes your total assets. Final portion of your balance sheet is equity and liabilities. First, we will start with the liabilities. We have loans. And let's look back to your question statement or the data given to us. Loan is 175,000. Just place it here, 175,000. And total non-current liability is the same value, 175,000. Okay. Now payables. How much is your current liabilities in your data? Payables were 18,000. So just place payables 18,000 here. Okay. And then overdraft. If you remember, we sold out our asset for 3,000. Look into this. It means that's the cash received from selling the assets. Then we deposited this much money into the bank, and already we have some balance overdraft, 14,500. So 14,500 minus 3,000. Sorry, not minus, because this is added to this, and our remaining overdraft balance becomes 11,500. So that should be presented in the overdraft balance, 11,500 balance as per cash book. So look into this current liability. It will be presented overdraft 11,500 because we received 3,000 from selling the assets. So total liabilities becomes long-term liability plus short-term liabilities. This becomes your total liabilities. Final value is the beginning balance of your equity. It was given in your trial balance, beginning balance of your equity. Let's see that. It is here, capital 75,000. We will just place it opening equity. Let's put it here, 75,000 as a working notes. Then we have retained earnings, 10,030. And then there is no drawings involved, so that's zero drawings. So it means if we add both of the values in the given statement, 75,000 plus 10,030, this becomes your total capital money. So I'm gonna write here 85,030. Now, if you add equity with the total liabilities, this becomes your total liabilities and equity. Total liabilities plus equity section. This is exactly equal to your total assets. So if you just remember, the total assets must be equal to liabilities and owner's equity. That's your balance sheet. I hope that you have understood so many tricks and tips in this question. And please watch this video completely to clear your doubts. And if you have any further question, you can raise through your questions.